Dear friends, at the outset, I wish all of you a very happy new year 2020. GST Annual returns for the year 2017-18 was extended n number of times, and finally on 26th December 2019 via a removal of difficulty order 10/2019, the due dates have been further extended to 31st January 2020. Keeping this in mind, we found that it would be very much relevant to share certain practical illustrations on how to report in the annual returns in case we have figured out any mismatches between our data pertaining in the books versus the data pertaining in the GST returns, be it GSTR 3B or GSTR 1, which has been already filed. So the purpose of this video would be to cover an understanding of why annual returns would be required, and as an outcome of reconciliation between books and my GST returns already filed, what would be the course of action and how the same requires to be reported. These practical illustrations would be covered. Well, as a first part of this series of the videos, in this part we would be covering the practical illustrations pertaining to liabilities, which is the non-RCM related, which is output tax related. Now, why this annual return is required? 1st July 2017, the GST law was implemented and people started understanding the process of filing returns, and for the initial phase, government provided relaxation and allowed to make changes to the data up to 31st March 2019. So, we understand that the data for 17-18 has been scattered over probably 21 months returns, right, from 1st July 2017 up until March 2019. Now, to bring it as a finality and give a final picture of what actually is the data pertaining to 17-18, this annual returns filing will be of utmost critical, and it will be very relevant to file it appropriately. This will further enable voluntary corrections from the registered person perspective so that interest could be minimized and penalties repercussions could be mitigated. However, what cannot be done through annual returns is input tax credit related corrections, either availment or reversal. Both are not possible through annual return. Now, as far as the reconciliations are concerned, ensure the registered persons will have carried out a reconciliation with their GSTR 3B, GSTR 1 and their books. This is as far as the liability is concerned. Similarly, with respect to input tax credits, the GSTR 3B, 2A as well as the books. Let's limit our discussion to the liability. Let's say that when this reconciliation was carried out, there was possible these scenarios which emerged. One, the liability was discharged in 2017-18 itself in the respective months. Second, it was although discharged in the same year, there was postponement of the discharge of liability in the forthcoming months. The third scenario could be part of the tax has been discharged in 17-18 and part has been discharged in 18-19. The fourth scenario could be there is still a difference between my books and returns data and a portion of liability is not yet been discharged yet. So how do you take such a situation? And there could also be a scenario wherein inadvertently excess tax has been paid than it ought should have been discharged. The final scenario, what we would like to bring out through this content would be a wrong discharge of tax, that is, discharge under a wrong head, be it IGST or CGST or SGST instead of vice versa. So these things we would be covering through some practical illustrations. Now let us take this scenario of a perfect match, such a happy ending. My books, returns and my 3B and 1, all the three go hand in hand. I'm sure this would be a very happy scenario, but very rarely coming up. So in this situation where my books and returns are perfectly matching, so in my GSTR 9, which is annual return, table 4, which talks about my liabilities both with respect to outward supplies and my RCM. So there we need to report this. Let's assume for time being that it is pertaining to B2B transactions. So I will report the entire details over here, and then I have already discharged tax on it. This will get auto-populated in GSTR 9, in table 9 of GSTR 9, and my tax payable and paid, everything matches. There's nothing I have done in the next year, so I will not report anything over here. Let's look at the case 2. What has happened here is, a liability pertaining to August 2017 has been discharged in March 2018, but within the same financial year. So how do we report this in annual return? Again, there would be no change over here. It would be reported under the B2B sales. However, there could be interest repercussions because of the late discharge of tax. Tax amount would be same. Interest, I will make it manually, enter this data over here. Interest, I will report under tax payable and discharge this to DRC 03 through cash. Let's take case number 3. Now this is a case where part of the taxes has been discharged in 17-18 and part of the taxes has been discharged in 18-19. So if we look at here, the transaction underreported in August 17 has been discharged in September 2018. How do we report this scenario in the annual return? In the part 4, I will enter 8,90,000, which is actually discharged in 17-18, and in part 4, that is report whatever is actually paid, no changes even here. But since it is discharged in the next year, that is 18-19, I will use part 5, table 10, and report my 10,000 and the 600 tax, whatever has been under discharge in 17-18 and discharged back in 18-19, and thus my total turnover here will match, that is the 9 lakhs, along with the taxes part. So the same reporting will go even in table 14 because that pertains to tax of 17-18 discharged in 18-19. So this is case 3. Let us look at case 4. This is a case of liability not discharged yet. That is, my books liability showed 9 lakh turnover, but I have reported as 8,80,000 and there is a 20,000 non-reporting of turnover and non-discharge of tax to the tune of 1,000. Now, how do I go about this? Here it is, since it is not a discharge, I will make these corrections in table 4 of GSTR 9. That is, I will report here under B2B supplies, that is 9 lakhs entirely I report here. However, in my table 9 of GSTR 9, this tax payable, which actually is 50,800, I will edit it to 54,000 and this difference I will discharge to DRC 03, selecting the drop down option as annual return under that menu. There is nothing to be reported in part 5 because I haven't discharged that in 18. Now let's see another case where excess tax has been paid. My books show a 9 lakh turnover, however, tax has been discharged 9,25,000. Pertaining to that, the tax amount somewhere like 1,500 is the excess discharge of tax. Now, what do I do about it? In my annual return, I will report my correct turnover, which is my 9 lakh and 54,000. However, I have discharged excess of 1,500. So, I will edit my payable as 54,000. Then 1,500 I will have to apply for refund through RFP 01. So, if I have discharged excess tax, I will claim refund by making an application provided it falls within the time limit prescribed under section 54 of the CGST Act. Now, the wrong head reporting, that is, it was a transaction of IGST, but the same was reported as CGST, SGST. So if we look at this scenario, as per the books, it is a CGST SGST transaction. However, in 3D, it has been discharged as IGST. Now, I will have to report the correct figures over here in my annual return part, table 4. So, whatever is correct under the correct heads, same figures I will be reporting. And even in my table 9, I will report the tax payable as correct figures and claim refund of paid under wrong head, that is IGST at wrongly paid. So, I will claim refund, filing RFD 01, and I will discharge this CGST SGST using DRC 03. However, interest will not be applicable as per the provisions in the CGST law. So, hence, I need not discharge interest if it is due to a wrong treatment of an interstate supply as intrastate supply and vice versa. So, these are the 6 scenarios which we thought would help us understand what could be the repercussions and how to handle these mismatches while filing our annual returns. Now, coming to the discharge of the liability to DRC 03, we will deposit the taxes using the same measure or the method what we use for filing PV, that is PMT 06 challan we deposit, and for discharging it, there is a DRC 03 separate form through which we need to discharge and offset this by selecting the menu, drop down over there as annual return. And if at all is there any excess tax which has been paid which comes within the purview of the time limit provided under section 654, then we have to make an application to RFD 01. So, we would like to conclude over here that although notification 47 central tax dated 9th October 2019 gives option to the taxpayers whose aggregate turnover is below 2 crores to file annual return, whether to file or not, even though they have that option, if there are such discrepancies, it would be suggested that they would still go ahead and make these corrections and file it so that the assessments will be smoother and also the interest and penalty repercussions could be reduced or mitigated. Well, in our next series, we will be covering how the practical illustrations with respect to RCM related liability, and also in case of differentials in input tax credit, and also if any reporting errors have occurred while reporting in the returns, regular returns, be GSTR 1 or 3B. So, how do we go about the reporting the same in the annual return? So, hope you find this video useful, and we thank you for watching this.